Dodgers win. Anyways, let's get it going. Bitcoin just dropped to 107,000, and the fear is real. In fact, the fear and greed index is flashing red. Gold is going parabolic, and the stock market is bleeding as investors scramble for safety. The U.S. government shutdown drags on. The trade war with China is escalating, and now a weak labor market is sending shockwaves across Wall Street. Is this just the start of something bigger, or are we looking at one of the most powerful accumulation moments in Bitcoin history? What's up, family? It's Coach Masi, and you're locked into the Daily Huddle, your one-stop shop for Bitcoin news, and I'm so happy you're here. This is where we break down the biggest financial news, Bitcoin insights, and market trends so you can stay informed, disciplined, and ready for opportunity when it strikes. We might even be in one right now. Let's dive in. All right, let's start with the chart that everyone's watching. Bitcoin at 107,000. After holding around the 110K level earlier in the week, Bitcoin broke lower today as fear continues to grip global markets. The Crypto Fear and Greed Index, one of the most widely followed sentiment trackers, has plunged deep into the extreme fear zone. Now, here's why that matters. Historically, when sentiment hits these lows, it often marks major accumulation zones. But right now, traders are spooked. You've got, let's see, government shutdown that's freezing spending and stalling confidence amongst the entire nation, a trade war with China that's heating up again, and a labor market that's showing cracks with unemployment ticking higher and job openings slowing down. It's not good news. All of that together is creating a perfect storm of bad and the macro uncertainty of life. And the markets are reacting. The stock market itself is selling off hard. Tech stocks, the darlings of the 2024, are finally getting crushed. The S&P 500 and NASDAQ are both seeing accelerated losses as investors run for safety. Even my hood stock is going down. And where's that money going? Well, it's going straight to gold right now, of all things. Gold just went parabolic, hitting new all-time highs as people rush toward what they believe is stability. But here's the twist. Gold's strength often signals the start of a liquidity rotation. When capital runs from equities too hard, basically hard assets, it's saying, well, the system is losing faith in fiat. We already know that. That's why Bitcoin was invented. Does that sound familiar to you? And that's why Bitcoin is going to step in. You see, Bitcoin and gold have always danced around each other. One's the legacy hedge, the other's the future hedge. But as gold climbs, Bitcoin eventually follows because smart money knows which asset has true scarcity, portability, and global reach. So let's unpack the two big drivers behind the chaos, the shutdown and the trade war. The government shutdown has now just really froze everything, right? Left and right, they're all fighting with each other. They're not agreeing on anything. And this isn't political. Whatever you vote for, that's fine. But it's got the government shutdown right now. Then we have the China escalation, tariff threats, collapsing supply chains. I mean, this goes back to 2018 and beyond, where we're raising tariffs on China and so on. And you know what? It makes sense, though, honestly, because GDP is going up because of these tariffs, whether you like them or not. That's the truth. But remember this, Bitcoin thrives in uncertainty. It was born out of crisis. And while the traditional markets are driven by politics, Bitcoin runs on math, code, and trustless security, no matter who you vote for. And that's why the smartest investors accumulate when others panic. Now, let's talk about the labor market, because this might be the most overlooked factor driving everything we're seeing right now. I mean, Nestle is firing people, Amazon's firing 1,500 HR members. Man, things are really uncertain. The U.S. economy was strong because of the labor market, but inflation was high, and now inflation's cooling, but the labor market is starting to break. So it's going to be interesting to see how long unemployment's going to keep going. It's interesting to see what happens to inflation and spending credit and sentiment. You see, the narrative is cracking wide open. Job openings are slowing, hiring freezes are spreading across industries, and wage growth, which kept consumer spending alive, is cooling fast. Even major companies, again, like Amazon, Google, UPS, they're pulling back new hires and cutting hours. That's not just a headline, that's a macro signal. Because when jobs weaken, it doesn't just affect paychecks, it hits confidence. Consumers start spending less, businesses see earnings shrink, and when that happens, stocks fall, credit tightens, and fear spreads through the system altogether. What we're watching right now is the exact domino effect unfolding right in front of us. Weak labor data is accelerating the sell-off in equities, pushing investors into defensive positions like gold and cash. It's also fueling what traders call a risk-off sentiment, meaning people are avoiding anything volatile. And that's putting short-term pressure on Bitcoin and crypto itself. But here's the key takeaway, and it's a big one. The weakness in the labor market is what ultimately forces the Fed's hand. It's what ends the tightening cycle. Once unemployment ticks up and growth slows, the Federal Reserve can't keep rates high for long. That's when the pivot begins, and it started already, and it's going to go again the end of this month. Rate cuts, liquidity injections, QE style stimulus, whatever label they want to call it, it's happening. And historically, when this happens, it leads to a recovery. We saw it in 2020, COVID crash. We saw it in 2018, tightening cycle. Every time the Fed pivots from hawkish to dovish, risk assets explode. And Bitcoin is almost always the first to react. So, while everyone's panicking about a soft labor market, the smart money is already preparing for what comes next. A flood of new liquidity, lower rates, and massive upside momentum in hard assets like Bitcoin. Let's zoom out, actually. Every single time Bitcoin has faced macro fear, whether it was the pandemic, rate hikes, or liquidity crunches, it's come back stronger. Because weak hands get shaken out so other people could buy their Bitcoin. And you need to know the truth. Bitcoin doesn't care about politics, like I said, or tariffs or shutdowns. It just responds to liquidity and confidence and scarcity. The same forces driving gold higher right now, fear, distrust, uncertainty, will soon flow into Bitcoin. You see, smart investors aren't chasing hype. They're building positions when markets are red, when the headlines are scary, and when everyone else is selling. That's how generational wealth is built. Not by timing the top, but by understanding the cycle. So what do we do with all this? Well, we stay calm, we stay disciplined, and we remember what we're here for. Long-term conviction. Right now, the world's scared. The fear and greed index is screaming panic. But for Bitcoin believers and hodlers like yourself, this is the noise before the next move. I'm telling you, this is what I really believe with my investments. So let me ask you, do you think this is just fear or a massive buying opportunity in disguise? Drop your thoughts below. And as always, remember, this is not financial advice. It's for education and information only. If you got value from today's breakdown, smash that like button and hit subscribe if you haven't already. And share this and hit the share button with someone who loves Bitcoin news. Well, that's your daily hodl. Stay sharp, stay disciplined, and as always, Lead.Pray.Hodl. I'll see you in the next one tomorrow.